All right, ladies and gentlemen, got your watch list coming in November 27, 2019. Happy Thanksgiving, or happy early Thanksgiving. This is the last trading day before we get Thursday off, and then we're going to have a short day on Friday. So this is going to be one of the keys, but I have your watch list. And we are going to talk about another play, $50 into 500. We did it again. It is now the 8th consecutive week with a crazy type play like this. I think it's showing you guys what's possible with options. We even talked about a few different things. I even want to even show if you guys saw Apple after hours too. That thing was crazy, but we got a few things to talk about. But even then, hopefully you guys are seeing the opportunity, at least able to learn something. But I want to go over background a little bit briefly again with that play and talking about the criteria for earnings, because that was the earnings play. So I got that. We'll go over the plays we made today, and then we will talk about what we're looking at for tomorrow. So let us get right into it and let us not delay. Make sure you drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. We will see you there in the morning. We made all of these trades live on stream. So the $50 into 500, we did that live on stream. It was even on the watch list yesterday, even though they did report this morning. But make sure we see you there. And if it's not for the plays, post and source that information. It's a great news scanner. So hopefully we see you there in the morning and throughout the rest of the day. But do not forget the most important thing. Post your watch list below. Let us know what you're looking at. And if you have any plays, post it. That's, again, part of the whole sourcing info. But let us briefly talk about the main keys. There's only a few things I really want to talk about. It's melt up in chess. And what I meant by that, I probably should have put like a comma, but we are seeing the market melt up. I had that end of the year prediction video last week. Kind of, this is looking to play out like 2017. We have the holiday. We're going to be having a day off on Thursday. Watch for the setup before the move. And I think what I'm saying is that we are pretty much about to be in checkmate. As we come into December, if we open off December with a good, strong push and things do good even just coming into this holiday, it's a lot different than 2018 and what we saw last year. Again, looking a lot like 2017. That could be the next move up into the next level and just the overall melt up. So watch for the breaks of highs and watch. I'm even going to be looking out for a big day. Regardless, again, there is news. There was some of the impeachment news that came out today with that hearing. I think it's set for December 4th or 6th, but that is what I'm going to be watching out for. And again, even watching the holiday volume and all that, and that's the key. This is the day before the holiday. Watch the volume, but now more specifically like moves like Apple and what happened with them after hours. That could happen a lot more often. So even here is Apple, if you guys didn't see, it even just started dropping pretty big into the market. And this was a pretty fast and vertical move down, and then it even had a crazy volume after hours, then it kind of bounced back up. But that's even actually something I want to highlight here. You could kind of see that with Apple did that. It dropped, and then it came up here, and then take a look here. Here's even Autodesk for earnings. It had a big drop up, came back up, kind of leveled out. Same thing with VMware on the high side. It had a high and came down. You're seeing a lot, and the S&P looked like that even today. Towards the end of close, it was kind of coming down, and then all of a sudden just shot back up. You're seeing that across the board. You could call it manipulation, call it whatever you want. This is just what low volume looks like. So this is what I mean. Watch out for tomorrow. Watch out for certain moves, but again, the conviction of them. Be careful. Again, there probably will be good short-term opportunities as far as this small time, but I don't know how big you can't really expect too many big things to happen here before the close, but we will see. But then again, now there's still the opportunity for swing trades, so watch out for that. And that is your keys, baby. So let us talk about the plays, baby. In particular here, we're going to talk about Dollar Tree. So this is the one. I went over this on yesterday's watch list. We got this here yesterday around close. All right, here it is. We bought about 30 minutes to close yesterday. Again, we did this all on live stream. So if you were there, you saw this. If not, you got to get your scream alerts, your stream insurance. Shout out to Colt, baby. But we bought this 100 put that expires next week. We got it for $50. We also got a call too. And this is the criteria I'm going to talk about, why we selected this, and kind of some of the key factors a lot of people have learned. And part of the criteria is being able to play both sides for pretty cheap. And that's what we were able to do here with this play. We were able to play both sides for about $104. And then we made like 5-something total profit. I could have took a little bit more, but I didn't sell out too early, but still about a $400 net. I'll take it. It was still 1,000%, but we've seen some bigger plays in the last few weeks. But that is the good news, and you could see here, where was it in the morning? We sold it this morning here at $5.50. So we literally bought it for $50, sold it at $5. There's that contract, but they had their earnings now. But even in general, like I was saying with some of these other plays, though, we've had a lot of plays. And again, Apple had a crazy move. It's saying I'm down $8,600 today. That's because of one of the premium sales. But I was talking about it today with the success rate of these plays. We've had 8 weeks in a row of 1,000% plays, literally stuff from the A-net ranging from $30 to $3,000 all the way down to the bigger but smaller plays just like this. But I said, look at the account balance and how we played around. I'm pretty much break even through all that. I had a brown, I'll look through it. I know it's at least 10, 15 grand in profit, if not more. I think easily more because we did that just even on the Qualcomm. But the point is how you parlay it from here. So all these plays, and I'm excited. And we even did another earnings play after this, but I'm excited to see more plays with these. But now you guys have to understand how you are supposed to handle these plays and even the strategy. This is a strategy to find them and pick them, but then how you choose to parlay, and if you play multiple and multiple and multiple, and then the risk tolerance, the key here is how much money you're putting in. As you see, why I'm making a point of this, it goes back to what I was saying earlier. The key is being able to play both sides for a certain price, and now you could up your risk reward. If we put $5,000 on that play, we would have made 50 grand. If we put 500, we would have made 5,000. So the key is either playing with a certain amount to keep your balances constant. And if you are, because fortunately we've been able to hit one every week, the odds will be in your favor. But now if you're changing the amount you play per bet, that's a different story. But now Dollar Tree reported they had earnings, and then we hit this play. We got the 100 put. So why did that contract go from $50 to being able to sell it this morning at $500? And again, for the follow-up on that, I sold out of that play as it was dropping. It was up at like 6 something or 650 at one point. It dropped, but then it came back up to 550. I sold out, and then I bought another play with an extra week at a lower price. But the key I focused on was how much money I put in. So essentially, I just put my $50 back in there at a worse play, and I even said this was a worse play. And that's simply because it's further out the money. We were already in the money, even though it has some more time, but you're paying an inflated price, because if these were going for 500, these are going for a lot more than they really should be too, or because of the recent event. So that was the follow-up play. So I just had my money in there. But again, you could see the key here with balances. And that's even kind of here too. Besides that glitch showing up that I'm down here, I'm pretty much my account here is this one's staying at 21,000. If you look through the past watch list, we've pretty much stayed around there this whole earnings season. The key is I'm cool with staying break even, but over those last 8 weeks on some of the parlays, depending on how I did it and which ones I went to, I exposed myself to, hundreds of thousands of dollars of opportunity by parlaying those profits. So I was cool with that, but the key is, keeping the balance in check. But now a lot of people asked about this play and how do we do it, and this is the criteria we came up with. It's kind of hard to see if we don't have any, big earnings coming up and we just played some earnings, but this is showing you where my positions were and where they were placed. But now the key, and as you can see, think about that contract we rolled over to. That's why you can see why it was so bad. But the strategy of going in this is looking into earnings, and it's seeing how much the market maker is pricing in. So how do you do that? You pretty much go to the week of earnings. And again, Dollar Tree already reported, so I'd have to do this with a company that hasn't reported. But essentially, you go to the week of the earnings. You're doing a short straddle, and again, I'm making it easy through this platform here, but you could just literally go see the price of the at-the-money contract. If you were going to short them, that's this gray indicator here, which is kind of showing you that what the market is pricing in. We've talked about this a lot here on this channel. So you can see that here on the curve, but now the whole idea is when you find a company prior to earnings, there's an event that's going to make it move. And now a lot of people, a part of it is narrowing in the companies, because not all companies are going to do this, and we never really know. We've hit so many of these. We've played a few different companies, but the whole idea with how little we're spending, it allows you to play those multiple companies. So we don't know which ones are the best and always going to hit. Like we played VMware 2 after hours today. That didn't hit. But the key that will kind of help you decide which ones to play, even it lies in the pricing. But essentially, I'll make another video on this. And the video, I remember which video I have. It's called turning $160 into $1,600 on Tesla. We did that with another play a few weeks ago, and that's where I talk about this criteria, because Tesla had the earnings. It met the criteria well, and all of these companies so far that we've played for earnings and hit, they've met this criteria. And this is something I said months ago, if you guys remember. I said there's something up with option pricing. This may not always work, but kind of the experience we've had this year and what market makers have been pricing in, it's created this opportunity, in my opinion, at least. But what you look for is the market, pretty much the at-the-money price should be pricing in about 75% of falling within one standard deviation. And again, that Tesla video explaining standard deviations explains this more in depth. But if it's pricing in 75%, that's what you want to look for. That means the market is expecting a big move. But the key that you want to find here is that you could get a play within 2 standard deviations that falls within here for the price of 3 standard deviations. And this actually does highlight this point very well, because before earnings, it met this criteria, and then I was able to get the 123 call here. We got that for 54, and then we got the 100 put for $50. But that 123 call at the time, see, it's a lot further from here. It's over there, but that would have fell right here before earnings within 2 standard deviations, and I got that for $50 or $54, and then the put, which was 100 put, this fell right within there too. And I got that for $50. So now why I say the price of 3 standard deviations, because take a look here. My rollover play, I bought that for $50. That is literally 3 standard deviations outside of the money. And that costs 50 cents. So think about that here. It's being able to have the market pricing in high moves or a big move, especially at the money. But then when you get just slightly outside of the money, they're going for really cheap. And I honestly think it's the demand. I think a good way to even explain this is, think about how many times people ask me the question, why are you buying so far out the money? I think that in and of itself kind of highlights there's not really demand at some of these things right outside the money until after the move happens. So that's even related to some of the potential plays that we're seeing here. But that's the criteria. Watch that video. It's called Standard Deviations, or like turning 160 into like 1600 or something like that. I don't know, but go watch that. That'll explain it. And again, we'll talk about this more. Let me know if you guys think we should make a real follow-up video for this, or I think it might be time to just actually try to document all of them. We'd have to go through probably all the past watch lists with every play. I could probably get the dates for every single one. You could kind of see where it lies in there, but if you've been following along, you've been seeing it work pretty well, but it takes a minute to get a hang of, which companies. And again, there's a lot of earning companies and a lot of duds, but there is that. Now let's talk about the other plays. So there's a few companies I want to watch, but even today, right off the bat in the morning, we sold those Dollar Tree, took that 1,000%. Rolled over. We bought another Palo Alto. So again, that one was another earnings play. Same criteria as yesterday. And again, I went over both of these plays on the watch list yesterday, but the Palo Altos, those went up 500%. And then this rollover went up 200%, but then it came down. But Palo Alto is going to be definitely one to watch if you guys didn't see them. Again, earnings play, similar situation, big drop. This is how we're profiting off of these options and being able to hit them, making sure we're actually getting in those. So we're like $3 out the money, but again, this is why I wish I didn't get the weekly. If you guys remember now, I didn't want the weekly, but that one actually, kind of didn't really end up too bad because I got closer to the money. So it's still up. We bought those yesterday at 38 cents here. There's Palo Alto on the downside. 217 put for 38 cents, but I wanted the weekly, but that one actually held up pretty good. But if we spent like, $30 more, which is almost double, so probably wouldn't have been the best, but I got the extra week. We could have made a lot better and been in a good play, but Palo Alto is going to be one to watch. But I added another one there. I grabbed another weekly kind of to add to it, added another $20 in there. And then I was thinking it was going to continue and I'll be able to do a ghetto spread, but it didn't. But watch that for the rest of the week. I don't know how tomorrow is going to be. Again, seeing all these moves, it's going to be a toss-up. Then there was Shopify. I did a debit spread on them, and Shopify was a real runner today. It went kind of crazy. We got in late. Again, we were talking about it. I didn't think it would go up to 330 this fast, but I said once it does break 330, I've talked about this. That's looking good, and you can see things are capping out and stalling out in very, very weird ways. So some of these are setting up for some nice swing trades coming in everything. And then I did a HD credit spread, so then HD also moved pretty crazy today. They started popping out of nowhere, and remember, they've been down after this earnings sell-off, and they shot up, so I did a credit spread, but they started going up because they had like an investor conference in Atlanta. But I did a play. I wanted to do a better play. It was a credit spread. I sold the 225 put, and I bought the 225 calls, and I collected $224 credit. But now by selling the puts, that means I'm pretty much bullish. I'm wanting these puts to expire worthless. And since I got $225, it's $2.50 apart. My risk is $26 to make $224. But now here's the problem. It's a weekly because the premium, and I need Home Depot to go up like $3 or $4. I don't know how I feel about that. I said even on stream, I should have got, if I got slightly out the money and I sold the 222s, we probably would have been sitting pretty by now. So those went up slightly, and those McDonald's from yesterday went up like 20% on that credit spread. Then I did a weekly gamble on UNH. So I did end up buying a few weeklies, even though I said stay away from them. Well, just really the Palo Alto, and then this UNH, I try to keep it small in the $11, but watch them now. UNH is going to be interesting. Again, there was even Johnson & Johnson, and I think Merck dropped, and then McKesson, MCK. Yeah, so there was stuff with like getting, I know MCK and a few got subpoenaed for, again, some more opiate stuff, and then another thing with Johnson & Johnson in the appeal, but healthcare started moving. I figured we'll take it. You know, they've moved up a lot, and if they did start to fall out, those contracts were cheap, but it was decent. And then I did the VMware earnings play. That met the criteria. I accidentally bought a weekly, sold out of that so I could, and lost like $5 so I could get into another week. Did the next week, did $100 both ways, and then actually I think I got two more. I did $150 now. I weighted it to the put side. That was a dud, and then I got $40 in weeklies on Apple at close just because of that. Yeah, so I a little too many weeklies here for this Thanksgiving. I don't know. Got a little carried away there, so we'll see. But those were the plays today. And besides that, you know, everything else, I'm going to just be watching the McDonald's. I think keeping an eye on Shopify is going to be good if they can keep going. The question is going to be, what kind of move do we get tomorrow? Thanksgiving will be off, and then how do we close with the short Friday? And tomorrow, pretty much what happens tomorrow will probably mirror what happens on Friday. So let's see for that. And then again, watch Apple there. Watch those health companies, J&J, McKesson, MRK. I keep an eye on Boeing too if there is big moves. Again, weird moves on Boeing after hours, then it just stops. And then watch FedEx as well too. I wanted that as the earnings play. I brought it up yesterday, but I didn't get into it. So keep your eye for them, and watch Autodesk. We'll see the continuations. I'm also going to keep watching Dollar Tree. Watch Roku as well too. They kind of have been going up strong. So both, again, if we get into a melt up, both of the, you know, Shopify and Roku know how to melt up. And then watch Disney. They were even at a high, and then they came down, but surprisingly the contracts didn't go up. So that could tell you something about pricing. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. We better see you there in the morning. You better post your watch list below. You better be thankful for everything you got in life. It is Thanksgiving. We're going to have the markets. Oh, I'm thankful for the markets. I'm thankful for all of you guys, especially if you made it this far. So I will see you bright and early in the morning. Let's go.